Hey, it's Clay at claytrader.com. This will be a weekly review of the newsletter component of the subscription service that I offer, the Inner Circle. A lot of times this gets lost in the shuffle because the live trading room that also comes with the service gets lots of the talk. And I mean, it makes sense because it's real time. It's just easier to talk about and talk about more often, myself included, on social media and whatnot. But there is also this component where, the first kind of point that I want to make is that, the Inner Circle of subscription service is not only for day traders. If you're somebody with a job or just somebody that can't watch your computer every single minute of the day, then there is this component which you can definitely, factor into your strategy from more so a swing trading point of view. So that's kind of like I said, the first point that I wanted to make. And then, as always, from disclosure's perspective, am I suggesting that every single alert that is sent out via the newsletter is going to be a winning trade, is going to be like these trades? Absolutely not. There is no such thing as, everything's going to be a winner. Everything's going to be sunshine and puppy dogs and rainbows and all of that. But what I do want to suggest and what I do want to kind of convey from an educational standpoint is this is why the culture, the community of the Inner Circle always preaches risk control, risk management, risk analysis, because losing trades happen. People are going to be wrong. That's just part of the business of trading. However, when you do focus on the risk control and risk management, when winners do come along, which you are going to see, they can wipe away, they will wipe away those controlled losses, and then keep an overall uptrend occurring within the account. So just keep that in mind. This is why risk management is so important, because losses do happen, but wins also happen. And I should note that this week we are going to look back at the scans from 8/6 of 18. Why are we going back in time like that? A couple reasons. First, it just has given the chart plenty of time to play out. And then also, in the spirit of fairness to those that have paid for the subscription, which I should note is just $99 per year. But in order to be fair to them, I don't want these things to still be in play because, like I said, that's not fair. They've paid for it, so I don't want to give away anything premium content. So everything we will focus on, everything has already made its moves. So it's not like there's anything that you're going to gain from okay, I'm getting the same value as those that pay. No, like I said, the charts have made their moves already. The first chart and alert I want to look at really illustrates a point that, just for full disclosure's sake and to keep things realistic, that not everything I put out is going to work and is even going to give a buy signal or anything like that. And I want to just kind of start off with that, again, just to really portray, in no way am I saying that every single, alert that is sent out in the email is going to be some, massive winner. So for here, we're looking at ticker MZOR. And, the category that it was in was a bounce coming. And then I map out, that you had a certain, hammer candle that was forming at this support. So, pretty much just bringing up the question, can it bounce? So let's see how this one played out. One thing to note about what you're looking at right now, this should look familiar. It's the chart. So this is the weekend because the newsletter goes out on Saturdays. So the next candle you see will be, the opening day of the next week. So remember, the whole premise here is a bounce coming, and kind of in a nice fashion. Monday right there was a big old red candle. So hopefully nobody's saying, oh, that looks like a bounce. Of course, it's not a bounce. I mean, it was a big old red candle. And then from there, things only got worse. Of course, that's not a bounce. So this is one where, it just didn't work out, but there was no play. And that's what I like to call these a no play alert, because there just simply wasn't any sort of bounce there. And yeah, that happened. So here was an alert that just nothing happened with it. And that's just life. That's how things go. And I want to, just like I said, I want to give the realistic impression that I don't want you signing up and saying, hey, Clay, you gave me the impression every single thing was going to be a winner, and then I had something like this. These happen. There's no way around it. The next alert here was BRS, and category once again was I classified it as a panic play. And pretty straightforward. The last time the price had gotten around this area, a nice bounce happened. So just kind of throwing out the question, hey, can it actually reach that point? Clearly it was, there's already quite a bit of panic underway. So could it panic a little bit more to get down right around the 1150 area? So let's see how this one all played out. So here's a chart and we'll run through it. So that next day, or not next day, but the first day of the week, Monday, the price actually did go down there and get a fill. And then the following day got the bounce there up to that point, which was about a 6% move. Everything, that's kind of sketchy. And yeah, I agree, this is sketchy. So again, the point here is that sometimes there will be no plays, sometimes there will be plays where, okay, it makes a move, and maybe you got something out of it. Maybe it was a small loss. I mean, it's not like it totally collapsed or anything like that. There is still plenty of wiggle room. Maybe it was a break even, but it was kind of a wishy-washy trade here. So yes, it did move 6%, and 6%, I get it, is not like a huge amount, but it's still in one day. I mean, you're not walking to your bank and ask for 6% in one day. They will escort you out with handcuffs for being a loony person for requesting 6% in a single day. So I'm not trying to, downplay 6%. But the point is, it wasn't it wasn't clean. It did happen quick, but after that, there really wasn't anything to it. And depending on the strategy, yeah, like I said, this very well could have been a small loser. It could have been a break even. It could have been a small, modest little winner. But yeah, this happens. It's the reality of the matter. The next alert here was for PETX. Category is a breakout coming. And, you got to have some fun every now and then. So just simply pointed out the volume, booyah, and then throw out the question, can it break this line right here, which had been quite stubborn. So let's see how this one all played out. So the drill. The next candle you'll see will be on Monday. So let's see how this one all unfolded. Right there, got the breakout of the trend line. So let's see how this one continued to go. That much further right there. Did some consolidating. Made another move up, some more consolidating, and then went even higher, and then finally pulled back right there. And that gave a move of 20%. So, I mean, you think about it up until now, there's been a no play, there's been, we'll just call it some sort of loser, small controlled loss. And now all of a sudden, here's a 20% win. Now, with that being said, am I saying that anybody played it perfectly and got exactly 20%? I'm not saying that. This was a 20% profit window, meaning that's a lot of wiggle room for you to, pull some profits from the market. Was it 20? I'm not saying that. But let's just say you played it half right. That's still a 10% move. Maybe you got 12, maybe 15%. But regardless, that's a nice solid move in a relatively short amount of time. And then finally, something that I haven't done before, but I wanted to do here was just to show another part of the newsletter, and that is for people that have taken certain courses of mine, and they take the course, and then I'll just run a scan for those and throw out some ticker symbols at them, and that way they can apply the strategy to the ticker symbols and see if it meets their personal criteria. But one of the courses I offer is called Trampoline Trading, and it's pretty much a bounce strategy, if you will. And this is not a sales pitch to for you to go buy Trampoline Trading. I mean, that'd be great if you do, but if not, whatever. That's not the point. The point here is that this also comes with the newsletter, so you do get those 5 charts, but then there's also the additional ticker symbols for those people that have taken, the certain classes or maybe gone through Clay Trader University. So for this, just for argument's sake, we'll say that AKS and DBD were losing trades. I would say that one was essentially a no play and one was a loser. Remember, risk management, so a small loser. So what I want to do is focus on HTZ. But like I said, for management's sake, let's just say that both AKS and DBD were losing trades. But now let's focus on HTZ. So here is the chart, and there was no chart obviously included in the newsletter because, well, I map out the strategy in the course itself. So I'm not going to sit here. I'm just going to give you the ticker symbol, and that because that's the power of learning how to fish, right? You can say, here's some potential areas to fish. Now go fish. So this is, what the chart looked like. So let's see how it all played out. So Monday right there, and then right after Monday, quite the move. Big old move, but as you'll see, party's not quite over. Did some consolidating, formed a nice pattern there, made the breakout, and then got that much more continuation, and then finally rolled back over right there. And that was a move of 39.8% in a relatively short amount of time. So again, even if, for argument's sake, those other two were losing trades, that's why risk management is so important. You keep things managed, you keep things small, and then, winners do happen too. And the cool thing about winners is it's not like you can say, hey, stock, stop going up, stop going up, stop. No, I mean, winners are always, as long as you play them right, the upside is, unlimited. Once more, just to reiterate, I'm not saying that anybody played it perfectly and got 39.8%. The point here is that the profit window, 39.8%. So even if you played it half right, yeah, I really screwed up and I only got, that's still 20% in a short amount of time. So a lot of wiggle room there to pull profits from the market. So a good gamut here of a no play, pretty much a losing, maybe break even, winning trade, and then a couple, good surefire, solid profit windows that gave plenty of opportunity to pull profits from the market. If you are interested in getting the newsletters and of course the live trading room, then you can just go to claytrader.com and /inner circle, or just go to claytrader.com and up at the top of the page, just click on the inner circle portion and that'll take you that. I mentioned the price already, $99 per year. I'd encourage you to get out your calculator and break it down, because when you do, if you do it for far enough down, it's literally $1.90 per week. $1.90 per week. I don't know what Starbucks is charging for coffee, but I'm pretty sure for one latte, frate, whatever you want to call them, it's more than $1.90. So $1.90 per week, and like I said, you get access to not only the newsletters, but also that live trading chat room, and then all these other functions right here that you see. There's also the mobile app that we offer. So, you don't have to, like I said, be locked and chained to your computer at all times. You can keep up to date, on the mobile app too that comes with it. So if there's any questions or anything, by all means, in the comment section down below, let me know and I'll do my best to answer them. Hope you decide to give it a try. And like I said, for $1.90 per week, $99 per year, as I always say and will continue to say, over the time span of 12 months, I'm more than confident you'll get at least $99 worth of value.